Welcome to this explainer. Geopolitical crises cause crazy market swings, but what's the math behind the chaos? So, when scary headlines hit, like the recent Hormuz conflict, how does war actually impact your portfolio? Literally overnight, the CNN Fear and Greed Index can rocket from extreme fear straight up to 63. To grasp these violent shifts, we look at kurtosis. Basically, it's the math behind extreme market moves. Look, wealth is hyper-concentrating. The top 1% gained 9 wealth share points, while everyone else dropped. What does that mean? Well, fewer people are moving massively larger sums of money all at once. This concentrated volume creates intense extremes. Because of that, betting on traditional mean reversion is a dangerous trap. Markets actually become bimodal. Take the Hormuz hope rally, driven purely by erratic, on and off ceasefire news. In this bimodal trap, the right tail is larger simply because markets have a natural upward inflation bias. Plus, a stock's downside strictly stops at zero, right? But its upside potential is literally open-ended. To measure these breakneck swings, pros use complex metrics like gamma, which recently hit absolute record extremes. Okay, so how do we actually track this chaotic, sentiment-driven volatility as it unfolds in real time? We can monitor specific US ETFs like SPY, MDY, and IJR, alongside their key international counterparts. We stick to S&P indices over the Russell 2000 because consistent inclusion factors guarantee fair apples-to-apples comparisons. Tracking Japan and South Korea is crucial too. Why? They're massive tech and defense exporters during wartime. With all this unpredictable, fast-moving data flying around, how should you actually react to the daily news? Here's the truth. Retail investors operate at a massive information deficit. Public headlines are usually just delayed propaganda. You can aggressively trade those headlines at high risk or adopt a totally systematic, emotionless ETF strategy. The classic strategy of 60% stocks and 40% bonds relies purely on strict, unemotional rebalancing. This stops you from panic selling on terrible news or recklessly chasing a chaotic, FOMO-driven rebound rally. As David Kotok says, investing in peacetime is hard enough. So is your portfolio actually war-ready?